All right, and we are ready to go. So, ladies and gentlemen, it is my pleasure to introduce you. Our next speaker, Lucas Vogelsang from Centrifuge, with the talk Mitigating Risk with RWAs in DeFi. Lucas, over to you.
Okay, hi. I'll start improvising. And let's see when I get my slides. So quick introduction. Yeah, my name is Lucas Vogelsang. I'm the co-founder of Centrifuge. So maybe starting with a bit of context, this is my fourth Polkadot Decoded. And so before preparing this talk, I started looking through and thinking about what I talked about in the last three. And, well, I think I can say we've definitely come very far. I remember the first talk that I did was about the ERC20 token and its history and how it helped the Ethereum ecosystem to develop. And from there, I went to, and from there kind of like showcasing how important it is actually that we all align around XCM and we find good ways to make it useful as the ERC20 token. Last year, I talked about real-world assets in general, some context. Actually, I still need a clicker, but I see my slides up here, so maybe perfect. Yeah, so last year then, some context, right? It was right after the magic money printing machine, also known as Anchor and Terra, failed spectacularly. And so I talked about how actually, well, DeFi is not just a casino, or maybe even not just a game of musical chairs, and the last person ends up holding the bag, but we can actually use it for other assets as well. And maybe today I want to continue a little bit here. As I said, my name's Lucas. Bit of context on Centrifuge, and I'll keep this very brief because I get bored about talking about Centrifuge. I'd rather just talk about DeFi as a whole and what we're trying to get done here. But Centrifuge started in 2017, launched as a proof-of-stake network, actually. I'm very proud to say we beat Polkadot, I think, by about 2 months. So there was this time when Kusama went live. We had a running testnet of a substrate-based proof-of-stake chain that we spent about a year developing. And we launched as, I think there's only been two substrate-based chains that really migrated. It was Centrifuge and Kilt. Today, one key number for me is we have about 210 million in TVL. To date, that's still a lot of it is on Ethereum, but as Polkadot DeFi is actually growing, we're looking forward to more and more of that moving over. Really, we are the market leader in what is today called real-world assets. Really, the idea that you take existing financial products like trade finance, real estate, etc., you tokenize it, and then you make it composable with DeFi as a whole. Yeah, so why real-world assets? Why do they matter? There is a certain appeal to being a true purist about crypto and really decentralization maxi. I think it is extremely important that our base layer is decentralized and we have really crypto-native assets. But the reality is, right, like we can't exist without the land we stand on, the food we buy, the farmers financing their production, and really most of what we know, right, somehow has a tie into the real world because we do not exclusively live in the metaverse yet. But it's also just kind of like, I mean, you might have noticed that DeFi is not quite as present here at Decoded as it might have been 3 years ago. It's because, well, like this, as I said, right, this money printing machine idea and a lot of these unsustainable things went out of fashion, and doing traditional financial products in DeFi is still a bit harder, but you can already see that like DeFi yields are going down while like inflation is going up, and that's actually, in theory, they should all be going up. And then the other thing, kind of data point that I think is interesting is that Boston Consulting Group, last talk, they published, probably not the same person, but they published a report saying that tokenization by 2030 is going to be a $16 trillion asset class. So think of how much money there exists in the world, JP Morgan, I think, has 25 trillion assets under management. DeFi, I think at the very top, didn't even get into the trillions, right? So we still have far to go, but like even 16 trillion, it's small compared to the global economy, so I think we have a pretty exciting opportunity ahead of us. So what has Centrifuge done? As I said, we have quite a bit of history, and we've worked kind of at this intersection of real world and DeFi for a long time, and we really believe that if you want to tokenize an asset and use it on chain, you need to make sure it is composable, right? And so what in TradFi speak, it would just mean that there's people that want to trade it, buy it, borrow it, hold it, right? In DeFi speak, it means you can compose it with other DeFi protocols. So we spent about 2 years working with Maker before it actually went live to mint DAOs, so stablecoins backed by new silver real estate. We then, about a year later, launched the RWA market, which was a version of Aave deployed specifically for real-world asset. And then the kind of last milestone that was really big for us is we started another major partnership, kind of like getting from the from the hundreds of thousands to the millions to the tens of millions to now to the hundreds of millions with Block Tower and Maker again, where for the first time I would say a really reputable large asset manager or hedge fund, crypto hedge fund, is specifically set up a credit fund to use Centrifuge to provide, basically to put together a portfolio of assets that goes into Maker. And that was about 200 million that they've to date originated about 150. Spanning across all different asset classes, really. So you can think of Centrifuge just as like credit assets as a whole, like making those usable in DeFi. So why do I care about this, and why is DeFi really important for what we're building and for this vision of kind of blockchains being a better way to coordinate, to transact? Well, I think there's different graphs and sources, but finance is slowly eating our world. This is the share of the gross domestic product of the financial industry in the US. So it went from less than 2% in 1860 to like now at around, like estimates take it somewhere between 8 and 10% in the US. So think of like going to Starbucks, you buy a $5 coffee and 50 cents goes to Wall Street. It obviously kind of creates shitty incentives, right? Like, I mean, I would have loved to be in Wall Street 50 years ago because it probably was a pretty good business decision, but probably the last 80 years actually since the Second World War. But it ends up in a system where we know banks are getting more centralized, asset managers are making more and more money. There's very little like removing some of this technical debt and just old overhead, and so in the end, a lot of that just goes to a few large financial institutions that we all know, right? Probably also contributed to what happened in 2008, what happened with Silicon Valley Bank, et cetera, et cetera. So I believe everyone should have access to yield, and whether that's like Wall Street or Main Street, and that's the ethos of DeFi, right? Everyone should have the access to a financial system that treats them fairly, that is efficient, that gives you the ability to kind of like directly transact, right? And in the end, our financial system has evolved into protecting the incumbents, protecting the large companies, because individuals are not trusted with managing their own money, right? US has accredited investor laws that put up a firewall that allow only rich people have access to certain assets. There's rules around listing companies publicly that are applied in very weird ways, where if you can spend a couple of $100,000, maybe millions on a lawyer, you get to sell your company to the public, no matter how shitty it is. As we can see with some of the SPACs that went live, right? So there's many things that are just kind of showing that the system today, it's made for the people that run the system today, not for everyone else. How is DeFi doing, though? I could say terrible, because most of it, well, not most of it actually, but the things that cause headlines, they're not really that great, right? We still have a long way to go, I think, and there's still a lot of gambling, outright fraud, and it's just really hard as a user to know what is and isn't safe. And maybe also falsely, a lot of people are attracted to it because they think it's a shortcut to richness, and usually those don't really exist. I could also say it's doing really great. This snapshot is a live representation of what the Aave money market has as collateral. Which bank gives you an up-to-the-second verifiable snapshot of how they're investing your money, right? None that I know of. You also have TradFi actually starting to understand it. And you have things like MakerDAO actually like having gone through some pretty crazy markets, having been live for almost 5 years, and doing a pretty decent job. It's not perfect peg, but they're able to provide a stablecoin that is decentralized, that is managed by the DAO, and is actually building something extremely exciting and interesting, which is a true alternative to the financial system as we know it. Right. So maybe like what I would say about where we are today, DeFi is chugging along. Step by step, we're moving forward. The problem is if we just stay toot the tiny tugboat, we're not going to make it. So what we need to do is we need to start looking at the assets outside of DeFi today, outside of the early ETH, the early Bitcoin, the early DOT, right? All of the people that come to crypto because they want to buy crypto assets, but we need to figure out how we go beyond that. Yeah, right. So where are we headed? I think DeFi is a tremendous opportunity because I've just shown you how big and inefficient our financial system is. And so I want to show a few exciting things that you can build with DeFi that won't end up with bad headlines for our entire industry and get the SEC on everyone's back, right? Because there is actually interesting technology to be built that will have many positive results all across the globe, right? I mean, one big thing is transparency and auditability. Like, you get to do stuff that is very hard. The millions of dollars that people are spending to pick apart the mess that is FTX, to trying to figure out what is actually true, what exists, what is fraud, who is owed what, in which corners Sam has hid money, right? It's the complete opposite of like going to DeFi Llama and looking at the live view of what's actually happening in DeFi today. With this, you can avoid stuff like Silicon Valley Bank, right, where everyone kind of knew that they're starting to accrue, or not everyone knew, but it was very visible, actually, if you knew where to look, of like this whole issue with bonds being devalued, not to go too much into detail, but right, in the end, lack of transparency, maybe lack of rules around these balance sheets, caused the Fed to indirectly print billions of dollars after trying so hard to curb inflation. Why? Because Silicon Valley Bank was just mostly mismanaged and was optimizing for short-term revenue where they probably shouldn't have done that. Right, another example that I like to bring is, and this is something that's very personal to me because my parents used to run a jewelry shop, so I always heard it from my dad. Like, if people paid with credit cards, it was always like, well, like about a third of his profit would go to the credit card company, right? So imagine like someone comes with an Amex, worst case, like you pay 3.5%. You start wondering why, right? And like now, if you do it online, PayPal is actually not better. So like, I mean, if you ask me what a credit card is for, I don't quite understand it because we have, with Polkadot, for example, an extremely scalable blockchain. If we had good wallets, good usability, right, we can start actually allowing peer-to-peer transactions to happen for something like buying a coffee that don't cost 2%, right? FX, another thing, right? Like, if you don't have a bank account with a good bank or you don't know how to use Wise, you're going to go to Western Union and spend 5 to 8% in fees to send money to your family in the global south, for example, right? There's already a project building an international payments provider that actually uses USDC in the background. That's cool stuff, right? Because it actually starts to attack some of these fat margins that we have. Now, to kind of close the loop with Centrifuge, what we're going after is just cutting the cost of lending. If you look at lending, the craziest number is, I think Google's cost of capital is about a full 10% less or more than a SME in the US. Default rates are not that different. Like US small business default rates are like in the 2% range. So like as a small business, why are you paying so much? Because banks like to write billion-dollar checks. They're not very and that very efficiently because there's competition for that. They're not incentivized to write a $100,000 check, a loan, at an interest rate that is actually competitive, right? So you end up seeing like, and it is really cool to see how like DeFi is already significantly cheaper, and the cost of capital, the funding cost, like it's also a bit lower, and that should go away as the market becomes more efficient. But if you look at it with non-bank lenders and banks, the majority is not actually funding cost, right? It's their operational overhead. And so, again, if we have a system that today is most incentivized to protect its margin, you won't get the labor costs, the operational costs, et cetera, everything down, because you have people that think current risk management policies in banks make sense and are protecting them at all costs, right? Because it actually makes it harder for someone to come in. So if we manage to attack this, right, what we will end up doing is actually we will end up improving our financial system for everybody, and most specifically for the lenders on the tail end of the spectrum, right? Because Google has hundreds of people in their accounting and treasury and finance departments that can call up Jamie Dimon and ask for a good loan, right? Whereas like I definitely can't do that, and so the margins are expensive at the bottom end of the spectrum. So bringing that to bringing kind of like DeFi into this and allowing really these efficiency gains to start to affect our financial system is going to have a huge impact for SME lending, kind of right, emerging markets that today have very shitty access to finance, and so on. And these numbers are coming from the IMF, so they, I would say, probably should know, right? So to summarize what I kind of talked about, what we need to do is we need to diversify assets, right? And that is like extremely risky in DeFi today. Going back to the Luna thing, the fact that almost like so much of DeFi was wiped out when Luna disappeared is because of a lack of diversity in asset classes. So like if Bitcoin goes down, everything goes down, right? That's not good. And real-world assets actually can't do that. I think the other thing is we need to remember that yield does not grow on trees, and a subsidized VC-backed money market giving you 10% yield a year without taking any perceived risk, right? Probably there's way bigger risk than you would think. The only way they get away with it is because they're definitely operating at the edge of the law or maybe even past it. And those things don't make sense. And there's technical benefits, right, that we can actually show in DeFi that are not really just skirting the law, and those can build better products. In the end, right, like DeFi is going to have an image problem. It to some extent already has because of such a big focus on shitty use cases or short-sighted use cases, that I think it's just imperative that as a DeFi ecosystem today, and anyone that's interested in building in it, we really focus on solving real problems, right? What I try to highlight. Like there's so many interesting opportunities, from moving money around the world to trying to lend to carbon credit projects or SME companies around the world, right? So kind of wanting to give a bit of a final, like maybe good outlook or a prompt to all of you, because my goal here was to come and make a bit of a positive outlook and like showcasing this opportunity. Like it's an exciting evolution, probably actually a revolution of the financial system. We've got ways to go, but I hope you all will find an opportunity in this big field of opportunities, because in the end, I think it will make a good impact. So sweating from this slide up here. I think I'm rushed through this just in time, but wanted to thank you all very much for listening about my rant on DeFi today and where it should be going, and happy maybe to take just one question if we have. And otherwise, just reach out to me. I'm usually pretty accessible.